Hi, I'm Jessie Walters coming to you today from Port Richey, Florida, Pasco County. We're here for Tampa Bay's Real Estate 101, and we're here with Sara Vandercar from Barrett Harding Insurance. She's been there for quite a while. I've known her to be there for at least 15 years, and we're going to talk about insurance, and we're going to talk about how to insure your home that you're purchasing, and some ins and outs and questions and stuff like that. Welcome, Sara. How are you doing?
Good. How are you, Jessie?
Good. I know that you have been there longer than that. So in the insurance, so how long? Tell me about yourself and how you got started.
I was 17 and I was in high school, got the job, started out as a receptionist. And then by the time I turned 18, I got my customer service license. And then by the time I was 19, I had my agent's license, and I've been doing it ever since.
Oh, nice. Yeah. I was going to say, and you look about 17 now, so you don't, I have to tell everybody right ahead of time that she really is older. She just looks really young. She's like, how old do I look? 12, 13. So yeah, that's great. So I met Sara. I was getting insurance for some properties that I had, and that's how I initially met her, and she was great. And she helped me years and years ago at Barrett Harding and stuff, and it was great. So a lot of people have questions on what inspections you need as far as you're purchasing a home, and now I have to get a binder. I'm actually I've got this house lined up. I need to get quotes, etc. So that's when we call Sara and we find out as far as she's going to ask questions as far as is this for your home? Are you going to be living there? Is this a actual rental? So that's a different type of policy, like a dwelling and stuff like that. So what's your initial? So I'm Mrs. Smith. I like to use Mrs. Smith, and I'm calling you, and so I say, hi, I need some insurance. I'm buying this house on January 1st. Help me out. What would I do?
So normally I kind of go over some preliminary questions about the home, occupancy. We go over your claims history, as well as any claims that have been filed for the property itself, because those are all factors in company availability, and how we can properly market the property to get you the best rate for the coverage.
Right.
So we run quotes. We work with several companies. We have access to almost every company available in the state of Florida. We shop it, and we try to find the best policy that fits your needs and your budget.
Okay, so now I know a lot of times because we had home inspector here last week, we had house masters, and they'll do the 4-point for the insurance company, depending on the age of the house. Can you tell me?
So most of our companies, there are some companies that once a property hits 30 years old, they require a 4-point. Some are 40 years old, some are 50. The purpose of the 4-point is to kind of go over the 4 major components of the home, such as the heating, the plumbing, the electrical, the roofing. They want to make sure that everything's in an overall good working condition. There's no curling or lifting shingles if it's a shingle roof. For the electrical system, we kind of go over the manufacturer of the electrical panel. We check to see what type of wiring you have. We don't like double taps. We don't like cloth or aluminum wiring. And again, some of these are more carrier specific. Some are a little bit more lenient on what you can have. The plumbing, they like to check the age of the hot water heater, the location. So just pretty much making sure all the insides of the home, everything is good and up to par. And then based on that 4-point inspection, it kind of helps us place the market a little bit better if we know that you might qualify here versus not qualifying here. So again, it just, once we have that 4-point, we can kind of pinpoint on what company is going to best fit you based on that inspection report.
Right. Okay. So now a lot of times with the 4-point, I've had some older homes like in Pasco County, Clearwater, Tampa even, they have the old electrical panels. That's what we were saying. So tell me about there's a couple different, I don't know if you can name them, but there's a couple defective electrical panels, and those are concerns.
They have like Federal Pacific, Zinsco. Those are the only 2 that I can think of off the top of my head that those are a no-go. Most insurance companies do not like those because they are known for causing fires or an electrical hazard. Now there are some companies that if it's been updated, they might be okay with it as long as, everything, like the ampage and everything is okay. But again, it just depends on the specific company. Each insurance company has their own set of underwriting guidelines. So again, once we obtain that 4-point, we can kind of go to whether it's Heritage or Federated or American Integrity, Universal, Frontline. There's so many different ones that, some allow certain aspects some others don't. So it just depends.
Yeah, so what about I always hear is it aluminum wire or copper wire? Like, what's the difference as far as insurance too?
As far as like aluminum wiring, I'm not sure why it's ineligible, but a lot of companies don't like aluminum wiring.
Right, okay.
I'm not an electrician, so I couldn't tell you the differences between copper or aluminum. But yeah, aluminum wiring, it is a red flag. Yeah.
Okay. And then also on the roofing, the age of the roof. I think we had to have a certain amount of roof life left on each roof. So tell me about that.
So it depends on the company again. We have some companies that if you have an architectural or 3D shingle roof, they'll allow it to be up to 15 years old. Some companies cap out at 10 years. Some have requirements that if there is a flat roof that is not constructed of the same material of the home, it's ineligible. Some will take it if the flat roof is updated within the last 5 years. So really, again, just depends. More companies are more lenient on like the tile roofs and the metal roofs. You can usually have an older roof, like 20 to 30 years old, whereas as a shingle, some companies, like one of our companies, Universal, they'll go up to 20 years, whereas other companies max out at 15.
Okay, right. Yeah, because so you guys have the roof certification then too, right?
And that's part of the 4-point. Yes.
Okay, so you're a new purchaser. You've got your home. You're gonna get it insured with Sara, and you're getting your 4-point. And then these are the things that they're gonna check. They're gonna check the roof, the electrical panel, like what she said, the water heater location, just different things like that. And then. And now if you're not going to live in the home, if it's not going to be a homeowner's policy, it's going to be a dwelling policy, right?
Yep. We have different dwelling fire policies.
That's for rentals.
Traditionally, you can have them as a rental. There are certain companies that if you're like a snowbird or a seasonal resident and it's not a primary resident, you may not qualify for a true homeowner's policy.
Right.
And in that case, we would offer you the dwelling fire, which is a little bit more limited in coverage than a true homeowner's policy, but it's an option to give people a place to get a policy if it's not going to be their owner primary property.
Okay. And then now what are things, so we're going to get the insurance policy, and I know that a lot of it, so when some of the new purchasers they get down to the wire on how much it costs, and I know you can kind of adjust by the deductibles and stuff
you have your all other perils deductible, which most companies offer $1,000, $2,500. There are a few out there that'll go up to $5,000 or even $10,000. You can play with the hurricane deductible. There's a lot of optional coverages that you can, remove from the policy to kind of strip it down, like replacement costs and contents. If you don't want water backup or identity theft, you can reduce your contents limit
by taking those off or reducing them. Okay.
Correct.
Right. Okay. And now a lot of people, the first-time homeowners, actually, and people that are purchasing homes for a second and third time, they don't know where a lot of the flood zones are because your homeowners and your dwelling policies, they're not going to cover flood insurance.
Typically, It's always excluded. There are a few companies that have come out in the last couple of years that you can add a flood endorsement to your homeowner's policy, which kind of is a benefit in the event of a claim. You know that you have one company adjusting both the home and the flood, so that you don't have situations like when Katrina hit. You have the insurance companies fighting over who's going to take over that claim. If you've got everything insured with one company, it doesn't really matter. They're on the claim to begin with.
Yeah, that's a good idea.
And sometimes the coverage that you can get on a homeowner's policy might be a little bit more comprehensive than the coverage that you purchase as like an NFIP flood policy. So it just kind of depends on what the client is looking for, what their budget is. And again, even with flood insurance, we have, there's so many private flood options, adding it to your homeowner's policy or doing a standalone NFIP flood policy.
Okay, and I just had one. I'm selling. The Pasco County had come through, and FEMA and all the endorsements and everything. They changed. So the flood zones that were all X. So there was one specifically Moon Lake. They changed it from an X zone to an actual A zone.
Oh gosh.
Yeah. So they're under contract and it says X on the MLS, and then we pull the flood maps and it's just changed to A. So. Because I've done just, sold different ones in that area, there's LOMA and FEMA, which you can get an elevation certificate. So when you're purchasing your survey, which is like what you normally do to, buy your home, you ask for the extra from the surveyor, and anybody can do that when you're purchasing the home. You can add that in. So you add that in, the elevation certificate, you take that, and people can call me too, or you can have your agents call me and how to take my home. We're not sure if it's in a flood zone. My neighbor neighbor's not in a flood zone. Well, you're perfect to take your home out of the flood zone by getting that elevation certificate, and it takes a couple of months to do all the paperwork.
It can, yeah. You can get a letter of map amendment to try to change your flood zone. I just had a client in Odessa, I think it was. He went from a high hazard down to a low hazard just by, being patient and working with the government because it's a FEMA product.
Right.
But you can get it
on the
done.
website. Anyone can apply for that. And like I said, it sounds like it's hard to do, but you literally just upload that elevation certificate. You can screenshot your plat max right from Pasco County, Pinellas County, Hillsborough County, wherever you're located at, and submit that to them, and then just fill out the application. And you just sit there patiently and wait. And most of the time, it does lower at least your insurance. Even if you're in a flood zone and you're not going to be moved out of the flood zone, you're still going to be it'll take the premium down because it might show that only part of your house is in the flood zone, or that, like on the lake, it just shows the bottom of the waterfront being in the flood zone. So as soon as you submit the elevation certificate, it takes totally out.
And then even once you're in a low hazard flood zone, there's still 2 different policy types for a low hazard. You have your standard rate, and then you have your preferred risk. Obviously, if you're going to be in a low hazard, go with the preferred. You get a much better premium than if it was a standard.
Yeah, I have to call you on that because because I think they're going to kill me, even though that one. So that's good. Yeah, so tell me about the difference between replacement versus cash value, because I know that a lot of people ask about that with the,
Yeah, and so and this is a very common question. So every time, and I use myself as an example, because when I bought my house, I bought it.
She bought it from me.
I did.
She bought it from me.
I bought it. It was, it was a nice house. It was 4 bedrooms, 3 baths, 2,500 square feet. Yeah. Purchase price was $96,500. It was a great price.
Yeah.
Now, when I had to insure it, most insurance companies do not allow us to insure based on market value or a sellable value or the purchase price. We are required to insure it based on a replacement value, so that in the event of a claim, you're going to get today's value, to rebuild or, reconstruct if you want to rebuild on that same plot or take the money and go buy another house. But that's very important because at the end of the day, if I had a fire and my house burned to the ground,
you need to be able to replace
the $96,000 would not have been a sufficient amount to rebuild that same home.
Right.
So that's why all insurance companies make you insure based on replacement value. Now, that's for the dwelling coverage. Now, when it comes to your contents or personal property, you then have another selection you can make if you want replacement costs on your contents or if you want actual cash value. I always recommend replacement cost only because at the end of the day, even if it's a $500 endorsement for the premium, if your house just burned down and you had to go out and rebuy everything brand new, you're going to spend a lot more than that $500 to have that coverage than, what it's going to take to buy everything.
Right.
But of course, people that are looking to cut their premiums, that is a way. So if you're the type of person that, you buy things secondhand or you like to go to thrift stores or, whatever the case may be, you can choose actual cash value, save that money on your premium if you know that you're not going to be buying more, expensive
it's lower.
things.
The premium's lower.
The premium can be drastically lower.
Right. Okay. Yeah. So now what about, what do you suggest for liability if you're just a homeowner? Is there a suggestion or is everybody different on that one too?
It depends. I usually tell people, look at your assets. What can someone try to take from you? Because that's what your liability is protecting.
Right.
So most homeowners companies, the minimum is $100,000.
Right.
For most companies, for an $18 increase in premium, you can bump that up to a $300,000 limit. Mm-hmm. Anytime we run quotes, we always start at a $300,000 limit and let the client tell us if they want to go down in coverage. Because again, in the society in which we live, everyone's sue crazy. So everyone's trying to make a buck any which way they can. So by having the higher liability, you're just kind of protecting yourself.
Right. Okay. And now I know this sounds crazy too, but on a homeowner's policy, so you have your homeowner's policy and if you have your home, say there's a sinkhole. Most homeowners policies don't cover sinkhole unless you have the endorsement, right?
I haven't, I have not had anybody approved for full sinkhole coverage probably since about 2008, 2009.
Right.
In 2007 legislation was passed that now all homeowners policies, as long as that policy is issued by a private admitted company, you will have the catastrophic ground collapse, which states that the home has to be condemned and uninhabitable as a result of a sinkhole in order for that coverage to pick up.
That's how I put it in layman's terms. So if there's a big hole and your house is in it, then you're covered. But if you have some cracks and some different things, it's not covered.
It's not covered. Even if you have the full sinkhole coverage endorsement, which is I very seldom ever come across a policy that has it. But if I do, I usually tell people, hey, if you want to keep that coverage, keep the policy that you have, because I can't guarantee that if you switch to another company that you're ever going to be able to get it back.
Right. Isn't there a fee too?
There is. So depending on the company, I've seen the inspection fees anywhere from $150 up to $300.
Right.
So the homeowner, the insured, is going to be spending this money with no guarantee that they're actually going to be able to get that sinkhole coverage.
Right. That's why I tell my customers, I say, well, again, I haven't seen any sinkhole endorsements, and even on the new construction, I haven't seen any on the.
It's not something that a lot of companies are wanting to write.
Right. Yeah, because poor Florida, we had a bad run with those.
We did.
I mean, some of them, they say some of them were real and some were, I don't know. I'm not an engineer, but yeah.
I'm not either, but I will tell you, just from what I have seen, a lot of people have pocketed the money.
Yeah,
and then not fix anything.
Right.
In my opinion, the conditions portion of the policy, if you are paid money on something that's covered under the policy, you should fix that problem. Because if not, to me, you're sitting there with existing damage, and then most companies won't write a policy if you have existing damage on your home either. So it's kind of like a catch-22.
Yeah. So you lose your insurance, and then your house burns down, and then you have no coverage at all.
So it's just
Don't spend that money.
No, fix your house.
Yeah. Yeah. So speaking of that, so on the actual. So say Mr. and Mrs. Smith, I always use them as my example, but Mr. and Mrs. Smith are going to go buy this home. They're going to get the binder, and they find out it had a sinkhole, and it's covered, as far as you can get it covered. They have the engineering report. So I say engineering report. Some people don't know what that is. So tell me what I would need if I'm bringing you this policy. In fact, I just brought you one.
Yes. So depending on what the engineering report says, typically you're going to have your subsidence report, which is like the initial ground study testing. And then in that report, the engineer is going to recommend, whether it needs grouting or underpinning, whatever the case is to stabilize that foundation. Then there's going to be a report for that. We would take, we'll gather those reports, look at it. Now I can tell you most of our private admitted companies, it doesn't matter if it was fixed, not fixed. As soon as you mention the word sinkhole, they don't want to touch it.
Right.
And I understand the logic behind that, because now that Florida law requires that all private companies include catastrophic, essentially somebody who maybe got paid on a sinkhole and didn't fix anything, but then 10 years down the road, if that house then falls in a hole, essentially they could possibly get paid twice for the same type of claim.
Right.
So we work with a lot of surplus lines companies that don't care if it was fixed.
Right.
If it was, great. It's not a requirement. Now the pricing might be a little bit higher than a private company, but you take on that when you have a sinkhole property.
We have to take a 5-second break, but I want to hear more about this. We'll be right back, and we're going to hear more about sinkhole claims and how to go forward. All right. Thank you. I'm Jessie Walters, and we're back with Sara Vandercar from Barrett Harding, from Sara and Harding. I made you own the whole place. So we were talking about flood insurance, and we were talking about basically, what you need and how to get out of the actual zones. And then we switched over to talk about sinkholes. And if your home has been repaired, sinkhole, and you have engineering reports, then you can go ahead and get insurance and stuff. And Sara was telling us about some people that have took the insurance money on the sinkholes and actually not fix the homes, and that was a problem for the industry. So that's where we left off. So you want to continue with?
Yeah, so again, depending on, the company, we have some companies that, whether it was repaired or not, we can still get a policy for you. Obviously, those are going to be a little bit higher in premium because of that. It's a liability exposure to the company, especially if you didn't fix the sinkhole.
Yeah.
But again, we do have a couple different companies that we work with, for sinkhole properties, because private industry, the private markets, it's just not something that they really want to write business for.
Right. And here's some of your stuff on there. Here's Sara's contact information if anyone needs any insurance quotes. She does more than just homeowners and dwelling policies. What else? Tell me about some of your other lines.
Our entire office does everything but health insurance. I mean, I specialize in like personal lines, so I handle homeowners, auto, personal umbrellas, jewelry policies, dwelling fires for rentals. But we also do business insurance. We do life insurance. We have annuity products. Sometimes we're able to package the things with, the same company to get additional discounts. We also do business in other states too. So we write in South Carolina, North Carolina, Ohio, Michigan.
Right.
So we're kind of well versed, and we do things outside of the state of Florida as well for homeowners.
Oh, that's good to know. Okay, and you've been in the industry for what's your total? You said
15 years.
Wow. So
yes.
And you look so young. That's what you were saying. You look 15.
Yeah, I get that a lot.
Yeah, you're like, I have my ID with me, I swear.
I do.
So when we were talking about homeowners, a lot of people just assume that every single thing that could go wrong with your house is covered. So this is kind of crazy, but I was reading this stuff on homeowners, things that aren't covered. It was like nuclear attack, just stuff and it says it, I think, in the policy.
Yeah, like war, riot, civil commotion. Those are standard exclusions.
Yeah.
Unfortunately, a homeowner's policy is not a cover-all type policy.
Right.
It's not a maintenance policy.
Yeah.
Like one of the common claims that we see that are traditionally not covered, like water seepage. So I had a claim one time where a hurricane broke the sprinkler head, and water seeped into her, underneath the door, and caused some water damage.
Right.
Unfortunately, that's not a covered peril under a policy. Most wind-driven rain is an exclusion. There has to be like a storm-created opening that caused the water to enter the home. So, like, say you have a tornado or
tree fell and.
Well, again, if the tree falling, it has to be. They have to look what caused that tree to fall. If it's a dying tree and that it needed to be cut down and you just neglected it, no, that's a maintenance issue. That's not going to be covered under a homeowner's policy. But if the cause of loss was, say, a tornado or a windstorm that knocked it over, well, wind is the cause of loss, and as long as you have wind coverage, you're just subject to your deductible depending on what type of windstorm that it may be.
Right. Okay. So just because you see a tornado or a hurricane coming doesn't mean that it's going to be covered. So make sure you check your policies. Yeah. And that's another thing too, is to keep your policies in a place, God forbid you did have a fire. I mean, I have friends who their houses caught on fire and all the paperwork was all throughout the house and stuff like that. So it's good to have
I tell everybody, email yourself everything. You can access your email anywhere in the world. So the same thing, like when we're writing a policy and we're kind of going over, the insured's responsibilities of things to do prior to the time of loss. So take photos, video recorder. The more proof you have of what you had, the more you can get back in the event of a claim. Unfortunately, they're not just going to cut you a check for $50,000 and say, oh, here you go, have a nice shopping spree. No, you have to prove what you had in the home prior to the time of loss.
I had like 500 Louis Vuittons in my bedroom. I don't have any receipts. They were all gifts.
Right, exactly. And that's, unfortunately, it doesn't work that way.
Yeah, and there's karma. So everybody do the right thing. Yeah, God's watching. Yeah. So when we were talking before too, we were talking about the 4-point and just different things like that. Now there's certain things, believe it or not, with insurance that you can get a discount on, and that's part of a reason to have the 4-point is because you can get some insurance discounts. And tell us.
So the 4-point itself doesn't really generate the discount. That actually determines eligibility to get into a company.
Right.
What can give a discount is the wind mitigation inspection. So if you know you've had a roof that was done after March of 2002, there's a good chance, that you can get some discounts. There are 7 sections on a wind mitigation report that are for the roof itself. And then within each section, there's like 4 different options.
Yeah, the straps and
Whether you have hurricane clips, toenails, single wraps, double wraps. So depending on what that inspector marks on that form, each of those items is a different percentage type credit. So it literally, it's hard to estimate what the discount would be because it's so form specific.
Right. And it depends on the square footage of your house and all that. But what I mean too is the garage door. I know if you have the hurricane straps on your garage door.
So that's the opening protection credit.
Right.
So the way the opening protection credit is every door, every window, every opening to that home has to be protected in order to try to get that discount. Now you can max out on discounts as well. So it's all on one form. So the wind mitigation encompasses the roof as well as the opening protection.
Right.
So if you're getting a ton of credits here, it might be a very minute amount over here for the opening protection.
Right.
But again, it's all going to be on that form. So we just take that form, we submit it to the company's underwriting department, and then they apply whatever discounts are available based off of that inspection report.
Right. So on that, I know like some of them are not, you're not going to get a big, but it's very helpful as far as like the protection, like to have the covers for the hurricane. For
Correct. Even if you don't get a discount, there's nothing wrong with protecting your home.
Right.
It's a large investment.
Right. Exactly. Yeah. So we'll say like a cover for every, like you were saying, window, door, anything with glass, it has to have a cover, the hurricane, and then the hurricane straps in the garage. I think those help, right?
I'm not sure of the specific wording. Normally, honestly, I just look at the form.
Yeah,
and there's like 20 options on that form.
Yeah.
So I just feel like, okay, they marked box C, which and then goes over large missile impacts and whatever the weight is. So really,
I forget exactly how that came up, but there was less a discount if you had glass in the windows of the garage door than if you had a full paneled garage door. That the hurricane coverage would it was somehow you got a better discount on the by having the fancy windows in the garage doors. Everybody wanted those like especially 10 years ago they were all with the little sun.
Yes. You know what I mean? The little half star. Yeah.
And now if you don't have it, you get more of an insurance discount for it. So
it could be because a lot of people don't think, on a garage door, if you have those glass openings, a lot of people don't think to protect that.
Yeah.
Well, if you just protected every other opening to your home, but not that one, you just made that your weakest point.
Right.
So that's why they require all openings to the home to be protected to try to get that discount.
Okay, good. And now I was telling last time, actually, I think it was the time before. No, it was the home master was here. I had been in Clearwater and there was we went into, she was showing me where the water heater was, and in the actual where the water heater was, the water from the outside had come in, and then there was an electrical panel with with no covering on it. And they were like, "What do you think?" Oh, and the gas to the gas for the actual kitchen was right there too. So I had the electrical panel open, a water heater, the water coming in from the city of Clearwater, and then the gas was right there. And I was like, and they're like, do you think we have any problem with, an asbestos tile on the outside?
Oh my gosh.
Yeah, and I was like, this is like a trifecta of like, I need to get out of here quick. And
yes.
And I'm not like, I'm not a home inspector, obviously, and I'm not an insurance person, but after doing it for so long, people don't know even what asbestos tile looks like. And so when I pull up, I'm like, I think that might be asbestos tile. So tell me about, is that a red flag for you guys too?
Again, I'm not an inspector, so I don't get to go out and see these homes. I get a little report and some photos.
That's better for you. Just to get the report.
Yeah, no.
Yeah. And that's another thing too. I think when you bought your house, so she bought her house and there was a home inspection report, but of course you work for the insurance company. So you took your home inspection and gave it to the insurance company. I normally don't suggest that only because when the insurance company, they take it as a report and they want every single thing fixed on the actual report.
We don't want an actual full home inspection because that home inspection is really for the buyer's benefit to know what you're buying. But literally insurance companies will nitpick if you don't have
the spiders. She had spiders. This is like, I don't know, 12 years ago?
No, I bought the house in 2012, December 21st of 2012.
So she purchased a home and she had a home inspection, and of course she works for the insurance company, so she's going to do the right thing and show them her inspection. And then there were spiders at the front door, if I remember correctly.
I think so, because the house had been sitting vacant for like 3 years
and
prior.
They made us get rid of the spiders. I'll never forget, because I was like, that is the oddest thing ever. And it was like,
I had a lot of weird things I had to do. Like there was like little hairline cracks on the outside. I had to have re-stuccoed. I mean, they made me jump through hoops.
And at the time,
it was crazy.
Because it was her first time home buyer, she didn't have money to hire like a stucco guy. So at the end of the house, all the spiders are dead, and you got like the lines. Remember?
Yeah, I do. Yeah, it was not a fun first experience for buying a home. It took 8 months to close.
Yeah,
it was dreadful.
And that was USDA, right?
Yeah, it was the USDA loan. Yeah.
So those are like you're one of the stories that sticks in my head for a home sale.
It was not a terrible first experience. Like I never wanted to happen again.
It's normally not like that, but it was like one of those. It was she was buying a foreclosure, so she got a really, really good deal. So that part was good. Yeah, that's
the only benefit.
Yeah, yeah. The USDA is a little torturous. The spiders torturous.
But after that, it was nice. I mean, like I said, it was a great deal. And,
it was a good deal.
Yeah,
you can't buy houses for $100 grand anymore.
No, so, not for that size anyway. It was on a quarter acre. I had no neighbors behind me. It was a gated community. Yeah. And the HOA fees actually were only like $130 a year. Yeah. So I mean, I had no complaints. It was
that
wonderful.
Was so USDA changes the area all the time. So
they do.
Yeah, so that area, I don't know if that's actually still an area, but it's Brooksville. So you should see me now. Speaking of spiders, I'm out there showing again for USDA, and and it feels like I'm like, am I in a flood zone here? Because I have like my feet are sinking in the mud, and there's these huge spiders hanging from all the trees and stuff, and I'm like, how come every time I go,
Brooksville? Yeah, it's Brooksville.
Same thing, spiders everywhere. But it's to the point where I just go like, I blow and the people are like, oh my God, and they're freaking out, and I'm like, just like, don't kill it, just explode out of the way. It's just like, But anyway, so it's my spider stories. But I'll never forget, because you had the home inspection report. So we don't suggest that. We don't suggest you get a home inspection report. You're purchasing your home first time, and for you to send it and give it to the insurance company. Keep that for your own. You bought it. You own it. It's not for your seller. It's for you, the buyer, to actually, it's not for the, for the realtors. It's for you to know what your honey-do list or what your problems are in the house, the little problems that you're going to go through. And then you're going to take when you actually get your contract, you're going to contact an insurance agent like Sara, and she's going to give you a binder. That binder is going to be for your mortgage. You can't buy a house unless you have a mortgage, the actual binder from the insurance binder from the insurance company. This is going to insure your house. If you can't get one, in other words, if there's a sinkhole and someone got cash and they're not going to issue it because the sinkhole was never repaired, you can't purchase that home on a mortgage. You have to purchase that home cash. So this is real important to make sure you know how to get an actual insurance binder. And so basically, she does all the work for you. You just call with your social security number, your date of birth, the address, and she's going to go from there, right? Pretty much.
Yeah, and depending on the company, so even if it's not a sinkhole property, a lot of the insurance companies, kind of the same thing that they do in auto insurance, they run your insurance score. So usually we have to obtain, socials really aren't required, thank God. Okay. But date of birth, your
previous license?
No, we don't need that.
Oh, that's only for auto.
Yeah, for auto. But for homeowners, with just the date of birth, we would need, your current address to help establish that credit history. Because obviously we're going to have the address of the property you're purchasing, but there's no credit history established there. So we want your previous or current address. And then, unfortunately, insurance scoring is used, and that can actually really ultimately affect your premium. If you have terrible credit, you're going to have a higher premium. Do I agree with how that is done? No. Right. But unfortunately, that'll make the rules. So, but insurance scoring is definitely a factor with certain homeowners companies. There's a couple of them that we have that have not turned to that yet, but a majority of them are. And like I said, it's the same concept, with auto insurance. They run your insurance.
Yeah,
based
it's
off
gonna
your
base-
credit, you get a score, and
Yeah,
each
if you've had a
insurance company is
claim.
different,
Yeah, I had a claim. I had a rental policy, and I had a claim, and the gentleman that was in there caught the dryer on fire in the garage.
Oh
and
my
so
gosh.
yeah, so then I was trying to get insurance just again, and they I think I called, that was when I called you, and it was like, why is it so high? And I got, and you again, they didn't ask me for my social security number, but I got like red flagged. You know what I mean? For 3 years. It's 3 years, right? You have a claim?
Fire claims, depending on the company, like most of them go back
Univer-
5 years.
Oh, okay. Yeah. So it was a while. It was a
Yes,
while. They
yes.
hated me for a while. Yeah, it was bad, but yeah. But that's part of it. So, okay, so we have the binder. You're going to help them with that, and then if they need anything else, as far as you cover, like you said, other things that could help other insurance policies if they want to get a quote at the same exact time from Barrett and Harding, you're able to do that as
Yep.
well. So, and you can get a discount on if you get them in some different ones, you can get a discount altogether to use the same actual company.
Yeah.
Right?
Now, the only problem, like with homeowners, a lot of our auto companies, unfortunately, do not write homeowners insurance in
Right.
Florida, and then vice versa. All of our Florida companies for homeowners do not write auto, but we do have some companies that, if we write your homeowners and you have your auto within the same agency, the homeowners carrier will allow us to give you a discount. Now,
Right.
that's not every homeowners carrier. We now have some homeowners companies that are now coming out with military discounts. Like, that's been a question
Oh, that's
for
good.
years, especially for veterans. My dad's a veteran. He was in the military. So, we try to save people money in any which way they can. So, I mean,
Right.
there's military discounts. There's different payment plans, that you can do that might offer a discount. It just kind of depends on the company and what they offer.
Right. Okay. And now a lot of time the home inspector, most of the home inspectors, because they have to be licensed now in the state of Florida, whereas in a couple of years back they didn't have to be licensed. So now they do, and they're the ones doing the the wind mitt,
The 4-point in the wind mitt, yeah.
Yeah. So they're the ones. So if you're wondering. Who's going to do that? That's who's going to do that for you, is your home inspector. If you don't want to have a home inspector, you don't have to, but they always say, get a home inspection. It's for the homeowner's protection. So if you don't get one and you go just to her and you say, well, we're going to just skip the whole home inspector thing. We know this is a good house. We're going to get her to insure it. Then you probably have a gentleman who goes out and does.
We have, so we don't necessarily refer any one person. We have a list of general inspectors.
Okay.
We usually tell the client, hey, call around, see who might be able to come out quicker, because depending on your closing date and how quick you're needing to get this done, if company A can't come out for 3 weeks, but company B can come out in 2 days,
Right.
that might be your choice to go to. All of them are pretty much around usually the same in pricing.
It's like 100 to 150.
Yeah, so like one of my guys I've been working with for like 5 years, I think for just a standalone 4.75, but if you do the 4-point and the wind mitt at the same time, he cuts you a break. It's like 100 or 125 for both.
Right.
So again, a home inspection is great for the buyer. We do not need it for insurance. It does nothing
Right.
for us. I'm going to hand that report right back to you.
Right.
For insurance, the only thing that we want is that
The wind
4-point, because it is going to specifically address insurance-related questions
Okay.
that pertains to the company for underwriting.
That's great. So, well, thank you so much for coming in today.
Oh, you're
See,
welcome.
You did great. Everything turned out good. She was like, I think I'm going to be nervous, and you did fantastic. So if you guys need anything, Sara is located, Sara Vandercar is located at Barrett and Harding. It's in Port Richey, and we have all of our contact stuff, which we'll put up underneath of this. So thank you so much. I'm Jessie Walters, and I'm back from Charles Rutenberg. I wanted to talk to you guys about, a lot of people are asking questions on, we're trying to purchase a home. We have our pre-approval, which we talked about with our Keystone Mortgage. We talked with Lindsay Weber in regards to that. So now we have our pre-approval. and we're trying to find that home, how do we actually purchase that home? So if you have a new realtor and you're working with them, you might want to have them join in on this just segment. I'm going to give you some tips. I've been buying and selling for 15 years, so I know a little bit. So I'm going to tell you guys basically how to narrow it down. So you have a home that you're looking at, and depending on how many children you have, you're going to want to, obviously you have the price, the pre-approval. So let's just use Mr. and Mrs. Smith again, $300,000. They want a 3-bedroom, 2-bath because they have a couple kids, and maybe they have one kid and they're expecting, they want to have another one here in the future. So you're going to be looking for a 3-bedroom, 2-bathroom. And now how do I figure out my location? Well, there's things that come into play with the location that's important to everybody. So obviously work. We have to work. A lot of people are working from home now. So if you're working from home now, you're going to want to look for a home that has maybe that extra office area that you can leave set up. You don't have to have your bedroom where you're working for your Zoom calls and then trying to clean things up. You want to have the extra studio office area. Of course, everything's not perfect. So let's just say we're looking for a 3-bedroom, 2-bath. There's one area we can kind of make work for if we're home, but it's close to our location. If you're in Tampa and you don't mind a little commute, you're going to probably go to Pasco because the square foot prices are less. If you don't mind a little bit further commute, you're going to go to Hernando because the square foot prices are even less there. But of course, the more south you go, the more square foot prices of the homes are. So you get a little bit bigger in Pasco than you would in Pinellas or Hillsborough, a little bit bigger in Hernando than you would in Pasco for the square foot price. So it's all relative, but basically, so the more south you go, more expensive. The more north you go, less expensive. So we got that down. So now Mr. and Mrs. Smith are looking for this house, and you want to know basically, if you don't have children, you don't have to worry about the school system. But if you do have children, that's going to be a big thing for you to make sure that your children are close to the schools. If there's a church that you like to go to, you want to make sure that church is in, a reasonable amount of time. You're narrowing it down. Is there some hobby that you like? Are your kids in soccer? Do they need to be near that soccer field, that home-based field? Of course, you don't want to change your whole life just for your kids, enjoyment, just for their activities, but it's going to make it easy for you in the long run. So you get this home that has kind of all these things that are into play. So now we have a location. So let's just use our location as Tarpon Springs. We like Tarpon Springs. It's close to the soccer field. It's close to my work, which is in Clearwater. I got a 3-bedroom, 2-bath area. Now, what are some other things that have to come into play? Well, things that you're going to look at, depending on your mortgage broker, they're going to tell you what you're approved for. What you're approved for is going to tell you as far as your debt ratio, which we had gone over before, if you need help, you can always call me with this. I can put you in touch with the lender and I help you, obviously myself too. But there's different things that can come in and make your payments higher, CDD fees. You have HOA fees, and you have flood insurance. So now depending on when you tell your realtor, I'm not really interested in being in a flood zone. So that's going to narrow it down. Well, in Tarpon, a lot of the homes in Tarpon are in flood zones. So now you're closer to US 19 if you're not going to want to be actually in that flood zone. But depending, even if it's Pasco and you're in Trinity and you like Trinity area, believe it or not, there are some homes in Trinity area that are in a flood zone. You're going to pay extra. There's some surprises in the Oaks, Newport Richey, in River Ridge, and there's a lot of different areas that have flood zones, which are going to surprise you in Hillsborough County and in Pinellas, Pasco, and in Hernando. So those are different things that can play into the flood zones, the CDD fees. Now, the CDD fees and the HOA fees are never going to go away. The CDD, they're going to put it in your payment. And actually, I say never go away. Some of those are 25 years. And so if you get a 30-year mortgage, you might see the end of it. But most likely, you're going to have to actually put that into your payment. The HOA fee is not going to be included in your actual mortgage payment. So you're going to have to come up with that around tax time or around Christmas time yourself. So depending if it's annual or if it's quarterly, how you're actually paying your HOA fee. So now, Mr. and Mrs. Smith, they found the house. It's perfect. It's a 3-bedroom, 2-bath. It's not in a flood zone. Has a low HOA. They're going to make it all work. Perfect house. Now, with the market the way it is right now, you have 10 other people purchasing this home at the same time. 4 people are out there while you're looking at it. You know that it's a busy market. Everybody's amped up. Everybody wants to purchase this home. It's perfect for you, but it's perfect for about 5 other families, and there's a shortage in Pasco, Pinellas, Hillsborough, or in Hernando County for houses. How do I get the house now? Okay, so you're going to make an offer, obviously. So when you make an offer on the contract, you're going to actually fine tune a couple things on the contract. There's things that you can fine tune. If you don't have to ask for closing costs, then I would suggest you not asking for them. When you're a seller's agent, which a lot of times I am, I'll look at, are these people strong buyers? And part of the actual seeing if they're a strong buyer is seeing if they need closing costs or not. If they don't need closing costs, I put them to the side. If you need a whole bunch of closing costs, then you're kind of number two as far as like the bids. I'll put bid 1, no closing costs. Bid 2 needs about 6,000 to 9,000 closing costs. So bid 1 looks stronger. And then there's another section on the contract. It's going to say about your actual home inspection period. Bid 2, the average days for home inspection period, and it's actually filled in on the contract for you, but you have to change it, is 15 days. So, but bid 1's serious about this. They don't want any closing costs, and they're going to say the home inspection, let's just give us 7 days. Let's put it less than half. So that's going to be an attractive thing for a seller because they know right away if Mr. and Mrs. Smith are actually going to purchase that property or not because, we waited 15 days and they decided it needs a water heater and, and some little things. And we found we didn't like this area, but bid 7 days, I only have to pull it off the market for 7 days and I can put it back on if Mr. and Mrs. Smith, decide this isn't the house for them. So that's very attractive. So now you're making an offer, you didn't put any closing costs in, and they said, now it's highest and best. What's highest and best mean? It means that there's a whole bunch of offers in, and we're narrowing it down. Is this the most that you're going to spend on this house? The seller's agent wants to know. So they want 300, and you've put 300. I gave them the price. I wrote the contract. I did the low home inspection. I did no closing costs. Why won't they take my offer? Okay, so you need another angle. So this is what you're going to do. You're going to write a letter. So now if you have a beautiful family, you can put a picture of your beautiful family and you're going to tell them how much you like their house and make sure you put their specific house. Don't make up a generic letter that you're giving to everybody on every single, purchase that you like, but make sure you like this house because I'm telling you how to get this house. So you're going to write this letter. You're going to put a picture of your beautiful family. If it's just you, you're going to put a picture of you. If it's just you and your dog and you're like, my dog's ugly, then don't put a picture. Put just a picture of yourself, or don't put a picture at all and describe yourself and why you want to live there. I just had a nurse who purchased a home. She is young. She'll kill me for saying this, but she's like 23, and we wrote the letter, and we didn't put the picture or the dog, but she's beautiful, and the dog's really cute too. And we left that out, but we put first time home buyer, first responder, works at Bayonet Point. This would be a perfect location. And the people, they said, well, the seller's agent came to me and they said, we had higher offers. We liked her letter so much. And these people are so attached to this home. They want to see someone who loves this home as much as they're going to do. So you want to make sure your letter that you write, in fact, says this, that actually nails that. It actually says, dear Mr. and Mrs. Smith, I love your home. This would make a great place for me and my 2 kids, whatever your situation is, me and my ugly dog, whatever. You're going to write that letter out and you're going to make it sound just like you love their house, and you're going to sell yourself by this letter. And you're going to make sure that letter is included with your actual contract, to when you send it over. Now you have a kind of an angle. They know you now. So it's harder to turn down someone that you know, like you've introduced yourself, you've told them how much you love the house. You've told them that this is a perfect location. This is, why you want to go there. Are you still in school? Did you just get out of school? You're going to use all these things about yourself as leverage and to convince these people what a great person you are and how you're going to take care of their home, and you're going to love it as much as them. So now you got the contract, you've got no closing costs, you put that date on the closing. You're going to actually put that date to match what date they would like to close. So it's key for your buyer's agent to call the selling agent and say, when do Mr. and Mrs. Or Mr. and Mrs. Smith are open to any closing date? When do your, Mr. and Mrs. Smith want to sell? And they will tell you, they don't want to close till February 1st. If someone put February 1st, they would probably take that contract. Even if it was a couple thousand less, they would take that contract. So a lot of times that'll be the actual sale, is that you matched up and you please these people and they know you're easy to work with. If you're more of the fussier clients, which we know who we are, then you're going to be like, this is the date I want to close. My apartment's over on this date, I want to move out on this date if they could make it work, and you put your date down. But if you're flexible and you can do that, then you put it to you actually want to appease the seller. You want to show them that you're easy to work with. So now after all that is done, you got your letter, you put your picture, you did all that stuff. Now another thing that will get you the offer a little easier is if you leverage with your loan. If you're one of those people and you can actually get a conventional loan, or you could pay cash. If you have a rich aunt somewhere and she has a whole bunch and she loves you and she wants you to buy a house cash, and you could pay her back after the sale. Well, cash, and they always say, is king with real estate transactions. Unfortunately, that's true. So the first person to put that contract in and has cash, they might put it in and it'd be a couple $1,000s less. That person will most likely get the offer, because cash they can close pretty fast too in a couple weeks. So usually, unfortunately, we will lose out to them. But conventional is a very good mortgage, and we talked about that with Keystone a couple weeks ago. And Keystone Mortgage, she told us how to get the conventional. Now, it used to be conventional was 10%. I mean, that was the most popular one. They have 5% conventional, and there is 3% too, but most popular right now is 5%. If you can get a 5% mortgage and you're competing against FHA or VA, you're going to move yourself forward too. So it's going to be first place cash, second place conventional, and then you have FHA and VA, which are very, very strong purchases, and they're very good loans. There's nothing wrong with them, but for some reason, a lot of sellers will pick a conventional loan first. Everyone, for some reason, I don't know why, but has heard a nightmare story about either FHA with lower appraisals or VA with lower appraisals, which right now they're very strong lenders. But if you can get a conventional and not ask for any closing costs, you're ahead of the game. And of course, if you can get cash, and if you can introduce me to your rich aunt too, so I can sell her house, that would be great. So we got like cash, conventional, FHA, VA, and any of those loans. If we don't ask for closing costs, it's going to make you look like a higher buyer. So a higher buyer on the totem pole of purchasing. So you got your contract, you got your letter, you got your 7-day inspection, you got no ask closing costs. The more money you put down on your deposit, the stronger you look as well. So if you can, that deposit can come back to you. If the home inspection doesn't go well, you will get your deposit back. You're going to have the 7 days to make a decision on the deposit. If you decide, you know what, I just don't like this house, and you happen to call your agent and tell them, I changed my mind, you will lose your deposit then. So you want to put a strong deposit on in that 7 days and make sure that you're 100% sure. So say you put on your $300,000, usually they'll say 10%, which is $3,000, but let's just say you want to look like you're the best buyer in the world, and you're going to put $5,000 down, you're going to give them $305, you're going to put your letter, you're going to put your inspection, and basically that's a very strong offer then. I can see you really giving somebody a run for the money on that, and plus you have your letter and everything with it. So I foresee that being good. And if it doesn't work out, you have your letter, you have the whole thing to do. You know how to advise your realtor, or use me as a realtor, and I'll get it for you, and whatever on that one. But yeah, so basically they want to make sure I got everything on there. Write a letter, put a picture. Yeah, so on the flood zone and then not the flood zone, we talked about that earlier. That makes a big difference as far as your locations, obviously, and your evacuation routes, your just different things as far as when you're purchasing a home. If you buy the home that's a 3-bedroom, 2-bath, and you're like, well, we can always build on that office because of, COVID, everybody's at home. We can make this a bigger home if we want. Be very careful if you do buy in a flood zone, only because your addition has to be put in, most likely. I mean, I'm not a building contractor, but most likely the ones I've seen in flood zones have to be built up. So if you're looking at a lot that's a bigger lot, and it's out of a flood zone, and you're in an HOA, you're going to have to ask your HOA if you're able to build on that lot. But if you're in a flood zone, you're going to have to build up. So the way to tell if you're in a flood zone, a lot of times when you're driving around the neighborhood, even if, just looking at houses, the newer homes you'll see the step ups, you'll see the garages are way up. That's usually the new line, like approximately. So if you see a house in 2020 and you're walking up steps and they're way up, that area that's in a flood zone, you're going to see that's where your addition is going to have to be built up to. You're not going to be able to build on the bottom if you are able to build, and that's per county, per each actual county, if you're even allowed to build in that flood zone and add on. But so that's something else to be really careful of if you're building in flood zones or you want to build onto your home. But otherwise, if you're just purchasing a normal home, and it's on an oversized lot, there's no HOA, and you're going to build on, and there's no flood, flood insurance in that area, you can most likely build on. That's a contingency you can also put in your contract. So if you want to, this house is perfect, but I want to put a pool in, you're going to need to check with the county. So that's going to be called a contingency, and you're going to want to put that in your contract. As far as that's going to be on page 11, and you're going to put contingency, want to be able to put an addition. Contingency, want to verify with the county to put that addition in, or contingency, want to be able to put a pool in. And that's not a really bad contingency, so people aren't really negative about that. If you have to sell your home to purchase this home, people are a little bit more, they're going to be a little bit more negative on that, but that can be done. I do them all the time. I had one, I call it a domino. It's the most stressful event for a realtor and their buyers and sellers. I just had one with my friend Jenny. Well, now we're best friends because we hung out now for like 2 months. And she just bought a house and sold her house, and the gentleman bought her house and sold his house. So we had a big domino effect. A lot of people don't like those in the contracts because it's more of you're taking a chance. But if you're purchasing a home and the home's been on the market for 30 days, someone will probably do this with you. If the home's been on the market for 5 days or so, they probably will not put a home sale contingency. You're going to have to bring your mortgage and be pre-approved with that. So that's not going to be something they will do. So have your agent, or you, if you're savvy, look at how many days on the market, and you'll be able to tell, do I need to give them full price? Well, if the house has been on the market for a day to a week, most likely in this market, I would say you have to give them full price or over, and you could put in a house sale, appraisal contingency to make sure it appraises out, but that you're going to have to give the price that they're asking if it's only been on a day to a week. If it's been on longer, then you can go ahead and get less, offer less and stuff. But I hope these tips have helped, and you can always have anyone call me, you call me, or your realtors call me. I do mentoring, so if they need any help. But my name is Jessie Walters, and I'm with Charles Rutenberg, and my info's up. Give me a call. Thanks.